What's up, traders? So today I'm going to show you how you can take an options trade that you are currently losing on and properly roll it out so it can become a profitable trade in the future. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple six figures a year from the stock market. I have a wife and 6 kids and I use the money that I make from the stock market in order to pay for our entire lifestyle. Now, unless you've been living under a rock, you've noticed that the stock market has pretty much gone down over the last month. And here I have ticker symbol SPY, which is the ETF that follows the S&P 500. But we can see here that we hit an all-time high on February 19th, and then the market just continuously went down over the next month. Now, the interesting thing about this downturn, as it was mainly due to constant tariff headlines, because most of the data points to our economy still being very strong, and now that earnings season is pretty much done, our US companies are also doing very great. So while of course in the long term the US market will always trend in an upward direction, here in the short term this volatility has created a new opportunity. However, if you were trading bullish strategies like selling puts or selling bull put credit spreads up here, then there is a good chance that you are down on that position currently. And with the monthly options expiration being this Friday, March 21st, I want to show you a trade that I'm in right now that is currently down and how we can easily turn it into a profitable trade. So let's head on over to Thinkorswim. So now I'm in the options chain and I have ticker symbol BITX pulled up, and this is just a 2x leverage ETF to Bitcoin. And I sold puts on BITX because I genuinely believe that the current administration will do whatever is in their power to make cryptocurrency a more valuable asset in the next 4 years than it is today. And so 3 to 4 weeks ago, I sold puts at lower prices in order to purchase the shares at the cheaper price. And now that expiration is set for this Friday. However, the stock price has gone slightly below my strike price. So now that we are closer to expiration, let's see what we can do about that. So if we come down here and we go ahead and select the expiration date for this Friday, and we come over here to the put side, we can see that I have a short put at $40. Now, if we look up here, we can see that BITX is currently at $38.04. So the stock price has surpassed my short put price. Now, if you're selling puts properly, you would only do this strategy on stocks that you would like to own at the cheaper price. Because I personally am happy with buying the shares of the stock at the $40 strike price. Because if the stock price is still under $40 by this Friday, then I will be forced to buy the shares. And what I will do is turn around and sell covered calls immediately at somewhere near my cost basis and get a pretty huge return. And let me show you what I mean. You can see the trade here, and you can see that I received $1.12 for opening up this trade. So if I were to be assigned, my cost basis would be $38.88 because my strike is at $40 and I received $1.12 for opening up the trade. And so I would effectively pay $38.88 per share. Now, what I'm going to do is once I'm assigned, I'm going to go ahead and sell covered calls roughly about 45 days out with the new shares that I have. So if we look at the options chain, we can see that this May 2nd date is about 46 days out. So I'll go ahead and select that. And remember, my cost basis would be $38.88. So I could sell a covered call at anywhere above that to be able to sell the shares at a profit and also collect on the premium from selling the contract. So I'd probably select a strike of about $39. And we can see that the bid and ask price is between $4.75 and $5.10. So I would receive roughly about $500 per contract for opening up this trade. And that would effectively give me almost a 13% return on my investment in just a month and a half. And so that's what my plan is. However, what if you placed this trade a while ago and you decided that you no longer want the shares or you don't have the money to buy the shares? And this could be whether you sold a put or you sold a credit spread. Well, what we can do is roll out and roll down. And so let me show you how that will work. So we will come over here and select today's expiration date, and we can click on our position, and I'll right click and then I'll go create rolling order. And we'll go ahead and select that. So it'll auto populate for you. And we are buying back this week's contract. And then now we need to select an expiration date that is further out. So I'll click on this, and we said we were going to go with the May 2nd date, which is about 46 days out from now. And so let's go ahead and look at what strike price we would like to select. And since the stock price is currently at $38, let's look at the $35 strike. So if we come down here, we already have the date selected. Now, if we go ahead and select the $35 strike, we can see that we will receive a credit of $161. Okay, so we're taking a position that is currently down by a few $100, and we're pushing it out further and pushing the strike down and turning it into a profitable trade of $161. And from here, you're hoping that BITX will be above $35 46 days out from now. Okay, but you can select a different strike price if you want to. You just have to select a high enough strike price that you are receiving a credit for rolling out. So let's see, if I selected a strike price of $33, I'll still receive a credit. If I went all the way down to 30, so that is too low. As you can see, it changed to a debit. So I need to go, let's try 31. That doesn't work either. 32. All right, so I could go all the way down to a strike of $32. However, we can see that I would only get about $25 for doing so it's probably not worth it, and I will stick with the strike of 35 if I was going to roll out of this position. Now, if you have a credit spread, it still works very similar. However, you could go ahead and sell the long call or the strike that you bought to open for whatever profit you can get out of it currently. But ladies and gents, that is how you can take a position that is currently down and turn it into possible income for the future. But if you know anybody that you think could benefit from learning from me, tell them about the Trade to Freedom community. Not only will they get my actual trades when I enter them, but they'll also get my full options course. And thirdly, they'll have full access to me at any time to ask me any questions. And lastly, they'll be within a community of other traders that all have the exact same goals as them. The link is in the description below. Feel free to send it to them. But that's it for this video. I will see you guys at the next one. Peace.